self-managed super fund is essentially a superannuation fund which is established and managed by the members themselves. So with a self-managed super fund, you can invest in property, you can invest in bonds, you can invest in precious metals, you can buy gold bullion, you can have term deposits, you can have managed funds, you can get a share trading platform via Comsec or any of the banks. The opportunities increase. The other reason is the super fund can actually borrow money. So you are actually increasing the power of your super in terms of investing by being able to use the power of borrowing and leveraging.
You're listening to the She Renovates podcast. You're listening to She Renovates, the podcast for women who want to renovate to create an income and a life they love.
Hello everyone. Welcome back to another episode of She Renovates. Now, today we're going to be talking about self-managed super funds and property. And I've invited Lina De Marco. So Lina actually started out as a cadet with Cooper and Lybrand, and did a Bachelor of Business at UTS. And she has worked her way up, deciding to work for smaller accounting firms. She developed a passion for small business and empowering women in financial literacy and business management. She has always been an advocate for gender equality in the workplace. Awesome, Lina. You're right up our street. And in 2005, she established her own firm and for many years has also been an educator at TAFE Digital, imparting her accounting, business and management skills. Lina then became a senior partner at a private firm before establishing Ademus Business Solutions. She is a member of the Chartered Accountants Association, is also an appointed Justice of the Peace, a registered tax agent, and ASIC-approved self-managed super fund auditor. She's also currently president of the Self-Managed Super Fund Auditors Association of Australia and a panel member of Inspired Women, which is how you and I met. So
that's right.
Well done, Lina. That's a very esteemed list of credentials, and thank you for sparing the time to be with us.
No, thank you for the introduction, and I'm really excited to be here. One of my goals, and as you said, as you mentioned, one of my passions and driving forces is to educate women in financial literacy, and this is part of it is here today. So yeah, thrilled to be here.
Beautiful. So what I think we will do, and before we start this, I'm going to preface this by saying I have never really been that interested in self-managed super funds until I realised that when you get to a certain point in your life where the income from your self-managed super fund is not taxed. That's correct, isn't it?
Correct. Absolutely. Yes.
Okay. So we definitely have to talk about that because that's flipping amazing. So now,
yes.
The younger women that I coach, I say to them, I know it's a pain, but this is what's going to happen in the future. So get as much money in there as you can. Yeah.
Absolutely. Yeah.
So do you want to go back to basics and tell us what is a self-managed super fund and why would you set one up?
Sure. So a self-managed super fund is essentially a superannuation fund which is established and managed by the members themselves. Okay. You can have up to 6 members in your self-managed super fund. And they don't have to be blood related. Okay, so you can even do this with, a bunch of friends, for example. And the reason why it actually works very well is because the way we do the accounting and the fact that it needs to be audited, your contribution to this fund is extremely transparent and dollar for dollar is calculated to each member. Okay, so you can completely keep track of your member benefits, which are then audited. Okay, so there is complete trust in the fact that you're putting your money in with other people. You don't have to, but the option is there, and you can track exactly what's yours, and you can withdraw that benefit at any point in time. Okay, the reason why most people set up a self-managed super fund is to have control over their retirement benefits, and that control comes in the form of many aspects. With the level of employer superannuation contributions increasing annually, that 11.5% is now forming quite a decent contribution every year. And the set and forget about super is sort of going out the window. Okay, So in terms of having that control, you can basically dictate where you want to invest your funds. It allows for a greater choice of investments. So with industry funds, you're limited to the share market. So you've got 100% of your assets just subjected to the share market, which is, an investing 101 no. We don't put all our eggs in one basket, but we are forced to be doing that with the government, right? So with a self-managed super fund, you can invest in property. You can invest in bonds. You can invest in precious metals. You can buy gold bullion. You can have term deposits. You can have managed funds. You can get a share trading platform via CommSec or any of the banks. The opportunities increase. The other reason why people set up a self-managed super fund is that a super fund can actually borrow money. So you are actually increasing the power of your super in terms of investing by being able to use the power of borrowing and leveraging. Okay. So, if you've got a $200,000 balance in your industry fund, your shares are only 200,000. But in a self-managed super fund, you can use that 200,000 to invest in an asset that's 650,000, right?
Yeah, it's amazing, isn't it?
That's the power of leveraging. Okay.
Yeah.
Some of the other reasons that people also invest is that flexibility. So we can make quick changes to investments. If we've got an underperforming asset or an underperforming investment, we can quickly change that to make it into a performing asset without too much of the administrative burden that you do with industry funds.
So can I just ask, so you mentioned that you could set up, like with CommSec, a trading platform.
Yes.
My understanding was that in super, you were not able to trade. Is that not correct?
No, you can. You can definitely buy shares outright in a self-managed super fund, just like you can buy crypto. I mean, I wouldn't recommend it. And my few young clients who like to dabble in there and do my head in with the crypto, but there is no prohibition, right? There's no prohibition in terms of also, developing property in a self-managed super fund, as long as it's not geared, right? So when you're borrowing to purchase a super fund, borrowing to purchase a property, that's where we have limitations on the amount of, renovation or change of that asset. So when you're borrowing, you can't significantly change the asset. So we can't sort of buy a block of land and build on it, or buy, an old house, knock it down and rebuild. But you can do cosmetic changes to improve that asset, so that you can increase the rent. So you can put in a new kitchen or a new bathroom, that's fine. You just can't substantially change it. But if you are one of these lucky people who have saved really well and you've got a really decent amount in your super, you can actually use that super to buy a property and renovate it, or, build a duplex or do whatever, as long as there's no borrowing involved.
Yeah. So that's
once again, it just, SMSF opens up that opportunity. Now, the other benefit is that the superannuation fund is only taxed at 15%. So it's an extremely low tax environment for wealth building. And when you get to retirement stage, all the investment income is taxed at zero, which includes if you buy a property and then you sell it to be able to fund your retirement, guess what? No capital gains tax, which is huge when you're buying property outside of super. Okay, so they're just a couple of the reasons why people set up a self-managed super fund, and they are getting extremely popular.
Yeah, I can see why. Now, early on in my business, I used to work with a financial planner, because obviously our women need to, have, and he said to me that he wasn't going to be working in property anymore because he was really concerned that the government would, he wasn't going to be recommending property anymore, that the government was going to change the rules that would make his advice like outside the guidelines.
Right.
So where is that coming from?
Yeah, look, I'm not really sure. I mean, look, we've got the risk of the government changing legislation in any aspect of tax, really, right? You can only make decisions based on what the current tax, laws are. Look, back at what was it, 6 or 8 years ago, when we had an election coming and Labor was going to get rid of negative gearing, right? So that didn't go too well because they didn't win that election, right? And I think that was a big no-no. So I don't think that the long-term strategy of the government is to really crack down on property. In fact, they are encouraging, that they put all these sort of planning processes in place to try and encourage people to build more houses, build more units, because we're at a shortfall, right? So I'm not really sure where that was coming from. There's always that fear that the government will change the rules, but what we tend to find is when they do that, it's not retrospective, right? So if you've already done it, you've bought a property, those rules are generally grandfathered going forward. Any new super fund that might be created would have to adopt those new rules. That's generally what happens. They're not going to sort of just go back and go, oh, yeah, anyone that's done this in 10 years, we're going to change it. Like that's not how it works. So I'm not really sure where he came from that aspect of it. I mean, there was some issues, with property spooking and all of that sort of stuff.
Oh, yeah.
15, 20 years ago. But
well, it's still there now.
Well, it is, but it's not. I think people are generally more informed and more well aware.
Sorry, Lina,
and
they're not.
Oh, really?
No.
Well, look, the financial planning rules are, I guess, are a bit tighter, and there's a bit more regulation around that sort of stuff. But look, it's our job to educate people. And, that's why we're here today. So, look, going forward, there's nothing, I guess, on, that we get, because we do get insights from all our, obviously, the associations and our tax bodies that we're members of, in terms of what the government is looking at, or, I haven't really, the property issue hasn't come up at all. The only thing with super really is the issue of potentially increasing that 15% tax rate. I think that is a very easy thing for them to do very quickly, but still would be met with quite a lot of political backlash. So they've got to be careful.
Yeah. So are you able to give advice around
Yes.
like investment advice?
Look, I've got a limited financial services license, which limits me to advice on self-managed super funds and superannuation in general.
Okay.
So I work with other planners when we have clients that have excess funds in their self-managed super fund. I work with other financial planners because the amount of products out there are just endless, and it's just too much. And I just don't, to be honest, I'm just not interested in looking at all the different individual share, that's just a full-time job in itself, right? Exactly. So I prefer to sort of leave it to the experts. If a client has got, an extra 100,000 after their property and all of that, or 50,000, whatever, we go to a financial planner and say, look, come up with a share portfolio or managed funds, or and then they will do the product-specific advice. But I can set the fund up, put all the frameworks in place, help you with all the compliance, do all the accounting, the regulatory stuff every year. We work with solicitors, we work with property brokers, we work with everyone. And so you really have a team of people supporting you, and that team are experts in their own right.
Yeah, absolutely. So I find that one of the problems there is around getting advice about anything that you're going to do is that almost all the financial planners are affiliated with a company or are getting commissions. So you're really looking, it's hard to find someone that's au fait with property. Have you got any solutions for getting around that?
Look, the planners that I work with, obviously the planners need to be licensed. Okay, so they need to come under like a licensee, but we generally want to find planners that their approved products are very broad. So most of the ones that I deal with have very broad in terms of managed fund access, through various platforms. So I'm happy with that. With the property side of things, most of them, deal with property also. So they won't make recommendations about a particular property, because usually the clients work with a buyer's agent, or they've already got a property in mind. Most people, when they set up a self-managed super fund and they're looking into property, they have already either had discussions with a buyer's agent or have made their own research. So they sort of know, look, we really want to pursue this from a property aspect. So the planners that I work with are property savvy also, in terms of they will include that in their statement of advice. But generally, if they've come to me because I can give that advice, I will do the basically statement of advice to get that property underway. We don't need to go elsewhere.
No.
We only go elsewhere when we want to look at managed funds or shares or that sort of stuff, and they want someone else to manage that. They don't want to do it themselves. But if you're happy to set up your own, ComSec trading, and you want to directly invest in a Vanguard fund or, a Macquarie fund, you can do that on your own. You just fill out a form and you send the money off, right? So you don't need to incur all these financial planning costs if that's what you want to do. Because essentially a lot of these planners, that's what they do. They put them in what we call passive investments, right? They're not actively managing that share portfolio for you. The average person doesn't have enough for a broker to be on call, been calling you, yep, this has gone up. So we call them, passive investments. Because the brokerage, well, the managed fund platform, so say the likes of Macquarie, they've got their brokers and their advisors determining what the product choices are within that fund. So you just put your money in a managed fund and it does what it does.
Yeah.
So to get a planner to do that when you can do it yourself, I mean,
crazy. But when it comes to property, let's say, like for the moment, I'm looking for a studio around in the city, and so I've had a conversation with my accountant, and he has said to me that you can't do the renovation yourself. So
correct.
So
yes.
Which seems a bit counterintuitive. Someone can buy shares themselves, but they can't buy a kitchen sink.
Yeah, it is. It is. When it comes to renovating, the issue is the actual legislation that's preventing that is if you are providing your skill and benefit in something that you would do, I guess, outside of super, and I know this is something that with the share trading you can do, the super fund cannot benefit from the expertise that you have as a member and trustee, which is ridiculous. So, for example, I'm an accountant. I charge my own self-managed super fund a fee for doing the accounting, right? I mean, I shouldn't have to because, I just do it in my spare time, but I do, which is ridiculous, right? But that's the rule. The super fund cannot benefit because it's a low-tax environment. They don't want people accumulating too much money in there, right, when that money should actually be used, for example, that accounting fee, that money is taken out of my super fund and I'm having to put it into my business, right, and being taxed normally. So the way you can get around that is that you can renovate it, but you're at arm's length with people, okay? So you can hire a builder to do that, right? You can hire a tradesperson to go in and do whatever the renovation is. You can't just use your personal exertion and your personal effort to do that, right?
Yeah.
But you can engage people to do the renovation, right? You get it, the cabinetry workers and so forth. Ideally, they prefer that you put a builder in place to manage it. So you can't really be seen as being the project manager, right? Because that would be a cost that you would get a builder to do and they would manage that project. So if you were able to, get an invoice, or a contract which said that, yep, this person is going to do the renovation, that's fine. You just technically can't go in there and do the work yourself. Everything's got to be at arm's length with a self-managed super fund.
Okay. And so what are the common pitfalls that mistakes people make with self-managed super?
So I guess one of the pitfalls is what they actually think about self-managed super funds. Often people don't even go near it because they think, I don't have the knowledge, I don't have enough money. It's a sophisticated investment product for the rich and famous, right? No, it's not. Most of my clients are your average, middle of the road income earners, earning well under 100,000 each, who have been able to set up a self-managed super fund with my assistance and being able to run it successfully and be able to buy a property. So it is a product that, is available. Yes, the ATO said that that there is an increased level of involvement that's required, as opposed to putting your money in an industry fund. But with training and education and support of an advisor, we just take you through that process. The first year is probably the hardest, and then after that, you just get used to putting your records in the right order. You just get used to doing what you need to do, just like when you do your annual tax return, right? Where a lot of people go wrong, some of the common things that happens is that you accidentally, withdraw, make a payment out of your super fund bank account for a personal expense, because essentially your money's sitting there in a bank account for you to access, right? And that's why it gets audited, to make sure that members aren't taking money out unnecessarily and for the wrong purposes, right? Because it's for retirement benefit. Look, when that happens, we normally pick it up at when we're doing the end of year accounts, and it's usually not too much of an issue. We just tell the client, put that money back in. The auditor will say, look, there was a contravention, but it's been rectified. So it's not, a really big deal, especially if they're just small amounts. So that's something that often is, done by accident.
We've got a couple of questions before we move forward, Lina.
Yeah, sure.
The first one is, what advantages are there for couples with self-managed super fund?
Look, there are lots of advantages. As I mentioned, a couple of the reasons why people, set up self-managed super funds is the advantages are that you have your control over your super, you have a wider range of investment choices. Depending on where you are in your life cycle, we can potentially reduce the tax rate from 15% to 0 on investment earnings, which definitely does not happen outside super. The other advantage that I mentioned that I didn't mention earlier, that's just popped into my head, is if you are a business owner, your self-managed super fund can buy your business premises, okay? And you can pay rent to your business. So you're paying rent to yourself rather than paying it to a third party. So that's another advantage. And even when you decide to, shut down that business, you still have a property, that your commercial property you can lease out to other people, or you can sell it and reinvest it. And if you are in pension phase when you do that, there's no capital gains tax on the sale of that investment property, okay, exactly, of that commercial property. So the advantages over just leaving your money in industry super well exceed any of the, compliance costs in running super. Because, yes, look, there are fees in running a self-managed super fund, but there are also fees. Okay, so you're looking at, to do the annual financial statements and tax returns, you're looking at about $2,200 to do all that compliance work. The audits are generally around the $350 mark. Then you've got ASIC fees and ATO fees. So you're probably looking about $3,000 a year in terms of administrative costs. But having said that, all managed funds charge a management expense and a management fee, which is a management expense ratio based on your funds. So often when you actually do the calculations, you're not too far off in terms of, it's not significantly more to have your own self-managed super fund. For that control and the benefits absolutely outweigh that. And look, and the issue with having everything in the one basket, and especially where you are in your life, if you've got everything in managed funds, and this is just a 101 of investing in any, environment really, and you're about to retire and we have a stock market crash, which is something you can't predict, but did happen, clients can lose, 30% of their super. So their retirement plans go out the window because they don't have enough money to actually be able to withdraw to then retire, right? So, I can't stress that enough, is diversify your portfolio, have a little bit of everything, have a property, have a bit of shares, have some money safe in a term deposit, especially now term deposits are giving us a decent return. So that's what a self-managed super fund allows you to do, allows you to mitigate investment risk as well as all the other advantages.
Awesome. Now, I've got another question from Fiona Toon. She said, you may have covered it, but not exactly. When having work done on a property in an SMSF, does it have to be called maintenance or can it be labelled as renovation?
Yeah, well, look, you are allowed to improve your property, right? Because the sole purpose of a super fund is for retirement benefit, okay? And your investment strategy is very important in determining what that super fund is doing. If you have a property, obviously you want to get the maximum rent, right?
Yeah.
So if putting in a new kitchen, improving that, you are able to do that. You're not significantly changing. You're not putting in another story, you're not putting in a granny flat. You are actually increasing the value of your retirement benefit. So yes, you can say it's an improvement. Normally, you try, and from a tax aspect, we really want to sort of have repairs and maintenance because it's a better tax deduction. So from a tax perspective, repairs and maintenance are sort of treated a bit more favourably. So if you're just sort of putting in replacing the toilet, that's the repairs and maintenance, right?
Yeah.
When you're doing significant, like putting in, say, a new bathroom, your tax deduction is only 2.5%.
Yeah.
So definitely you want to look, you have to basically do the right thing, and if you are replacing that bathroom, then it is an improvement, and it's okay to improve your asset to be able to get a better return.
Yeah. Beautiful. Now, 2 more questions. Is
Sure.
there an age barrier later in life where SMSF is not worth it?
Look, it really depends on what you are trying to do, and what your investment strategy is. Okay, if you are later in life and you're generally a bit more cashed up from the super side of things, you can set up a self-managed super fund and buy a property, because the reality is we are living longer. And you may retire at 65 and potentially live till 95. So that's a 30-year gain on that property, right? So if you were to buy that outside super and then sell it down the track, you'd have capital gains taxes as an individual, but you don't do that. You won't have that in a self-managed super fund. So it really, it's hard to sort of do a blanket yes or no. It really depends on the individual's circumstance and what they're investing in. If they were going to just invest in managed funds, I would sort of say, well, look, you could do that quite easily without the headache and without the cost in an industry fund, right? Because you need to take out a pension. So it does get to a point where we do shut down self-managed super funds when we've liquidated a whole heap of assets, and for example, we're just holding cash. There's no point. There's no point. And if your account's trying to hang on to get those fees, there is no point. You may as well withdraw that money, just put it in a term deposit in your personal name, and just save yourself those costs. So it is definitely a conversation that needs to be had with the individuals, just to sort of work out what they're trying to do, where they are, and what their investment strategies are, and then you can make the right choice as to whether it's the right investment vehicle for you.
Yeah. Awesome. Now, I've got a question. Rolling over money into a self-managed super fund.
Mm-hmm.
We've been trying to do it for at least 2 months and getting nowhere fast. You got any tips on that?
Yeah. So the government a couple of years ago introduced a new legislation called SuperStream, which was meant to really make the rollover process quite seamless. Was meant to take about 3 days from the request, and it just hasn't really worked that way. So definitely, if you're still doing it paper-based, it does take longer. We have the software.
Sorry.
Oh, you're doing it through SuperStream too?
Well, our accountant is,
Correct. You can't really do it yourself anymore.
No.
With the SuperStream process, it's about, I guess, depending on how often you do these, you start to realise what funds are going to ask for what. So most of the funds, unfortunately, your likes of your Rests and your Hester are still asking for a signed wet signature form. They want certified ID. They want a copy of the bank statement of the self-managed super fund. So what we try and do to try and speed up that process a little bit, a little bit more, is to just try and have all that up front. We know they're going to ask it, so we have it all ready, get the client to sign, send it off, have it in the system with them, and then we do the SuperStream request. But look, our experience has been that, look, it's taking a while.
Yeah.
Probably about a month. Because the other thing too is, unfortunately, these super funds, industry funds, every time you do submit a bit of information, it goes to a call center, and they won't necessarily ask for everything at once. Right, so you'll get these piecemeal requests, and unfortunately, with these requests, it takes about 5 days for them to action every single request.
Okay. So every time it's 5 days.
It's ridiculous, yeah. So what we've been trying to do, because it's frustrating for me too, it's frustrating to keep track of who's what at what stage. So we just try and get all that paperwork done up front, have it all ready, send it in, and then do the super stream request electronically, right? Because if you do the super stream request first, they'll come back and say, no, we need this, this and that, and it's got to be a wet signature. That's the other thing too, which is frustrating in this day and age, is needing wet signatures. So that's just something that I guess from practice of what we've done, that we found it's helping a little bit.
Okay, awesome. So is there anything that we could talk about this for hours, but is there anything particular that I should be asking you that I haven't?
I think it's important, for people to know that, look, there is a little bit more time and effort involved in setting up and running your self-managed super fund. But if you've got a good accountant and a good advisor to just help your hand through it, it's not an overwhelming task. And as I mentioned, I have clients who, aren't degree qualified, or, don't sit there behind a computer all day, and are completely capable of running their super with my assistance and support, and we tell them what we need done. So, it is an avenue that is available to everyone, and I guess my goal is to allow people to, to have that extra property purchase. And, sometimes individuals have maximised their borrowing capacity as individuals. So the other advantage is that your super fund, you're creating an entity, creating a new borrowing capacity. Right?
That's awesome.
So, I think that I think we've touched on the main issues today, and, some of the pitfalls and the advantages, and, being quite objective in that.
There's just one thing I wanted to add, and something that we have found is, because we're pulling together a class project, some of our members are actually investing in that project from their self-managed super fund, and which I think is really amazing, because
Absolutely. That it's something that can be done if you've got the right structure in place. And so, some of my clients, for example, have, they'll know 3 or 4 different people with 3 or 4 different super funds, and the super funds all contribute into a unit trust, which then goes and buys a property, and they renovate and flip it or hold it as a rental property, or it allows you to buy, more expensive properties, or rather than buying a unit, you're buying a whole unit block. So lots of planning opportunities with that also.
Absolutely. Well, listen, Lina, thank you so much for your expertise today. It was a bit touch and go there, but we got there in the end.
Yeah, I'm sorry about that. I don't know
That's all right.
what's going on.
That's the way we roll. We just roll with the punches. Can I just ask you, if anyone wants to get in contact with you, we'll put your contact details in the show notes, but do you just want to let them know, how you like to be contacted?
Yeah, absolutely. Look, feel free to send me a text. So my mobile number is 0404 003 670. I prefer that than people leaving messages, because it takes me a while sometimes to get onto the voicemail, but the text I will see. Alternatively, you can send me an email at lina@ademus.com.au. Happy with either of those methods. I will be going overseas tomorrow, so I will be back on the 4th of October. So if you want to try and contact me after the 4th of October, it would be better, because obviously I'm not going to be able to get back to you in the next week and a half. But they're the main avenues, and love to help you out, or have another discussion or more detailed discussion. Really want to help people in this area.
Thank you so much, Lina. So take care.
Thanks, Bernadette.
This is the She Renovates podcast. To discover how to harness the power of renovating, check out theschoolofrenovating.com.